So you've probably been hearing a lot about structure, market structure here and there, right? So, and you're wondering what is structure actually, and you don't understand what it is. So most of you think structure is simply having a market moving up, down, and up, right? Or sometimes you may think it is simply the market making these lows, lower highs, lower lows, lower highs, and lower lows, right? Now, this is part of structure, yes, but what actually does structure form, or what can we use structure for, is what I'm going to go deeper into, right? So let me just clear this. The meaning of structure exactly is these turning points here. Are you seeing these turning points? Let me just actually circle them. These turning points, these are the things that make structure. It's not that simply that the market is moving up and down and people take this to be structure, the whole of this. Structure is simply these turning points that the market is making while going up and down. Now, a combination of these turning points here make a lot of things. The combination of these turning points can make these trend movements up and down, which most of you think is the conclusion of structure. The combination of these turning points here can make what we call shapes. We can have M's, we can have W's, head and shoulders, and the rest, right? The combination of these turning points here can also give us impulsive moves. For example, I can have a turning point from here, and then the next turning point is created after breaking all these other turning points. So structure is just more than having higher highs and higher lows. Are we together? So today let's go through and we see how you can use these turning points. Now, another aspect that most of you tend to misunderstand is that for me to be able to use structure, I need to look far more behind. For example, I have to maybe reduce my chart like this and observe what happened maybe months back or days back. No, that's not true, right? So for you to be able to benefit from what structure is, just focus on actually the current move like this, right? For example, if the market has made a long-term move like this one here, excuse me, just focus on these turning points and be able to identify which turning point was broken and never tested. You're getting it? So if we have a turning point higher than this one here, for example, that are closed, you can consider this one here, so that price can come back and retest it. Just focus on the turning points that have been broken in that current move. For example, here, if the market breaks this turning point and it's high here, we expect the market to come and react to this broken turning point. If the market continues higher, then we expect it to react to this turning point here, just on your left. Do not look far. Just look at on your left, on my left, for example, if I'm here where price is, what is on my left? There's this turning point here. That is structure. Structure should not necessarily mean that there has to be something like this or there has to be something like this, right? Just one turning point. For example, if the market has come down, gone up, this is structure. If the market comes back here, once the reaction here, right? Even if it gives us a false breakout and breaks back up, I've taught you guys the rules of false breakouts. This is structure. This turning point is giving us something to base on while making decisions, right? So I hope you guys can eliminate that thinking that structure is simply when the market is trending, creating highs and lows, breaking structure here and there. No, structure is just a turning point that creates a lot of things. For example, when someone says, I have a structure for my cows, I have a structure for my... It was built. When you're building something, you're joining parts, right? You're joining a turning point. You come and join this point, you join this point, and you join this point here. This makes a structure. Maybe your cows stay inside here, right? So this is a structure for the cows, right? They call them a kraal. A kraal is built by joining these turning points here. So the same applies in the market. If you want to create, if a shape is to be created, turning points are going to be joined to make that shape, right? So structure, just look at it as a turning point. So if it's a combination of turning points, it creates other things like shapes, patterns. Even patterns are part of, you can put them under structures, but focus so much on the turning points, right? So I'm going to use an example of NASDAQ so that we identify the turning points and how we can actually utilize them, right? This is what we call structure-based trading. We're just going to focus on turning points, right? Those turning points create structure for you. For example, let's take an example here. The market came down and created this turning point. then went up. So meaning that I'm going to focus on this turning point when price returns back to it. So you see price came back to it and failed to take it out, meaning when you go to a smaller time frame, it communicated. And also those people who understand the candlestick language, you can clearly see that the market gave us a tweezer bottom in a monthly time frame. This is a direction showing us that we are most likely to push higher. And you can see we broke this turning point here and we came to this one. Also, another thing that I would like to make you guys understand and focus on so much is what we call closure of price. You can use the line chart to identify where price closed, right? That turning point there is where price closed from, and it's very important while making your decision for trading. So let's assume we're using this move upwards. So we have this turning point here. We have this turning point here. I'm just going to mark turning points to identify for us closure of price, and we have this current turning point here, right? So let's just go back to the candlestick chart. Now, if you look here, I have these 3 turning points while using line chart. Remember, we have a video, I'm going to attach it, of drawing support and resistance. We have 2 ways. You can use a slab or you can use a line. Now, when you're using a line, it means that you're focusing on closure of price, right? You have to make your decision based on closure of price. But if you have to use slabs, you're focusing using an area, right? For example, I can have this, and also here up here, we have no tails or wicks. I can also have this one up here, right? So this is how we draw your slabs on the turning points that will make your structure. So also here, now where we are currently, price can decide to make an M. When it turns from here and then breaks this neckline, it will have created an M. So this is what we call structure-based trading, right? Do not focus so far. You will only focus on what is behind here on your left when it breaks here. So when it breaks here, you look on your left. But currently, what is on our left is this turning point. So when we break above, we shall look at this turning point as our resistance and this as our support. Do not struggle just to identify things very, very far, right? So when price rejects this place and starts coming down, then we know that we are going to focus on this turning point here, right? This will be the structure that we'll focus on. So let's try to do analysis just basing on the things that we have marked here. Now you can see we have this impulse from here up to up, and then we had this turning point here. Now we had this breakdown in the people that I've been speaking to personally. I didn't manage to post it online. So we have this impulse from here up here. The rules are the same. I taught you guys how to use Fibonacci. You can see it came back to one of our Fib levels and rejected upward. So personally, I'm expecting it to actually break also this point and maybe come a little bit higher to tap into this previous high, the highest point NASDAQ has ever reached. Sorry, I didn't mention, I'm using NASDAQ as an example. Or even to go higher. Personally, I'm expecting it to go higher, but of course, the first target we shall set is that high that the market has created. Now, we have impulse, correction, impulse. As long as we don't take out the Fibonacci retracement level, then we are still pushing higher. Now, also remember, the market makers are not in a hurry like us. They may decide to first come back and test this point here, which they didn't test before they continue higher. So you have to also go to the next lower time frame and focus on the price action that is happening there. So let's go down to the next lower time frame, which is the weekly time frame. So now when you come to the weekly time frame, we also had an impulse here and correction. I spoke about this in one of the breakdowns. I posted it on with the team posted it on the social media. Impulse, correction, and pushed up. So this is the another impulse that we're talking about currently. Then also here we can observe a loss of momentum. That's why I'm basing on so that the market is most likely going to continue higher. So this is what I just spoke about. It doesn't matter whether it's trend lines or just focus on the turning points. These turning points create for you structure. Now, if you check these turning points, I've created a pattern. This is a bullish continuation pattern, right? So what is it formed by? It's formed by just turning points of these structures here. So when you join the turning points together, it creates for you that shape, or it creates for you a pattern, right? So structure basically just starts by one turning point, right? The turning points are very, very crucial in our trading. So we have broken above this counter trend line here, which is creating a pattern. So if you want, you can now also bring in, we have this turning point that the market has broken. So I'm just going to change the color to differentiate this here. So let me just delete this slab so that our chart is clean. So the market can give me a pullback into this area, then to continue up here, or the market can break above to make an impulse because we've broken this turning point and this one. If it can break here, then we can use the Fibonacci as a conference. But if it doesn't, there are higher chances the market may come back to this area here before continuing up, because this is a W and then an impulse, right? So if we can give us a retest into this area here, or even if it wants to come and tap into this level here, let me just mark it with blue here, and then you can continue upwards. So let's go down to the daily time frame. What is important is that the structure in the monthly time frame and the structure in the weekly time frame are speaking the same thing. So I'm just going to adjust this slab to make it a little bit okay. So what are we waiting for? We're waiting for either the market to come back into this level here. Remember, as a buyer, if you're buying something, whether it is in the market or you're going to buy a physical product, always make sure that you're buying at the cheapest price. We buyers usually look for prices that are low, that are favorable to us. So instead of buying from here and here, which one is better alternative? The better alternative is for it to come down here, and then we look for change of trend either here or here before we can continue upwards, right? So these are the levels that we have marked, and all the 3 time frames are speaking the same thing. What is left is for us just observe change of trend. Now, also to determine the type of trader you are. Do you trade intraday? If you trade intraday and also you trade reversals, you can look for opportunities here. Though I don't usually advise to go against the trend. Wait for the market to come into cheaper prices, then you just continue the trend, right? Unless you've been trading for some time, you have experience in trading reversals, then you can. But I usually don't advise people who are not well conversant with a lot of experience to trade reversals. So we can just wait for the market to come down here, observe change of trend into this area or change of trend into this area, then we can push into these levels up here. Personally, like I'm mentioning, I expect NASDAQ to make a new high, but our first target will be that all-time high that it made. So these are the structures, or these are the levels of structures that one can be looking for trades from, either here or here, before we can continue higher. If the market decides to aggressively break back below, still these are the same levels that you can use. If the market aggressively comes, reacts here, breaks below, you know that on a retest, the next target is this. If it aggressively breaks this level on a retest, you know that now I'm going to have to identify another structure, which is this one here. Look at the immediate turning point. That's what creates a structure, the immediate turning point. After breaking that one, we can have this turning point here. After breaking this, we can have this turning point here, right? So how do you mark turning points? I've already mentioned it. You can either use line chart to mark the closure of price, because it's very important in making decisions, or you can use a slab to give you an area. Are we together? So those who trade NASDAQ, these are the levels that I do have. Now let's try to check how H4 is actually performing to us. Now H4 is very, very clear. You can clearly see the market is making highs, lows, highs, lows, highs, lows, high. So what do we want to see? Once the market at least giving us a deeper correction before we can continue higher. Now, some people, those who have big capital, if you want, or if you have big capital that can hold some drawdowns, some people tend to use also Fibonacci in small time frames, which I don't advise, right? So they use Fibonacci small time frame to come react here, and then they continue with it, because sometimes the market is so aggressively moving and they may not retest all turning points, right? So if you have that capital, there's an impulse here, it's correcting already, it could continue up. But if you don't have enough capital, wait for the market always go into major levels before you can look for change of trend, and then you trade either here or change of trend into this level before you can go higher with it. So you can clearly see that the structures we've marked in those bigger time frames are clearly reflecting all the time frames that we do have. And also you see it's aligning perfectly with our entry time frame. The market is making also higher highs, higher lows, higher highs, higher lows. So we need a retest into this area before we can have a decent run upwards, or from here before we can have a decent run upwards. That is it for those who have been wondering what structure is. The term structure is confusing you here and there. Simply it's turning points that when combined together form for us shapes and patterns, right? So that is it for those who were confused by it, and I hope you guys have understood it.